Utilities are crushing tech in 2025, and no one's talking about it. While everyone's chasing AI stocks, there's one boring sector quietly beating the S&P, paying out thousands in monthly dividends, and powering the entire AI revolution behind the scenes. We're talking up to $8,000 a month in income from utilities. You heard that right. The so-called safe and boring plays are exploding with growth. Pull up this chart. That blue line? That's XLU, the ETF tracking utility stocks. And look at that red line. It's outperforming the S&P 500 in 2025. Surprised? Most people see utilities as safe, slow, and defensive, but not this year. Thanks to the AI boom, these companies aren't just keeping the lights on, they're powering the entire infrastructure behind it. And today, I'll show you 3 utility stocks that are riding this wave, delivering rock-solid dividends and explosive growth potential. Stick around till the end, because the final pick? It could pay you over $8,000 a month in dividends from just a $100,000 investment. Why utility stocks? Let's be real. When people hear utility stocks, they think of some boring company that mails out your electricity bill. Not exactly the kind of investment you picture exploding with growth. But here's the thing. That's exactly why you should be paying attention. While the crowd chases the next flashy AI stock, smart investors are looking for something different, something that offers reliable income and a front-row seat to the AI revolution. And that's where utility stocks come in. First, let's talk cash flow. In a market that feels like financial dodgeball, with tariffs on the one side and geopolitical chaos on the other, stability is king. And utilities? They're cash machines. Why? Because whether markets are booming or crashing, we still need power, lights, servers, air conditioning. These companies generate consistent revenue, which means steady dividends, often 3% or more. That's nearly double the yield of the S&P 500. And that kind of reliable cash flow, it acts like a cushion when the rest of your portfolio starts shaking. But here's the plot twist. Utility stocks aren't just safe anymore. Thanks to AI, they're starting to look like the cool kids at the growth table. You might be thinking, what do utilities have to do with AI? Everything. Because AI isn't just eating the internet, it's devouring electricity. Language models, autonomous systems, machine learning engines, they all run on hyperscale data centers. And those data centers, they don't sip electricity, they chug it. Like you with a double-shot espresso on a Monday. Back in 2024, global data centers consumed around 25 gigawatts. By 2030, that's expected to triple to 80 gigawatts. Electricity use is forecast to grow from 3 to 4% of global power to over 12%. So this isn't just about keeping the lights on, it's about powering the future of AI. And yet, here's the kicker. Most investors are missing it entirely. Take SCHD, a fan-favorite dividend ETF. Guess how much it allocates to utilities? Almost nothing. If your portfolio is overloaded with financials and consumer stocks, you're leaving a huge opportunity on the table. Adding a few high-quality utility names doesn't just boost your yield, it adds real balance and AI-driven upside. So now, let's get tactical. Here are 3 utility stocks that bring the heat, reliable dividends today, and serious upside tomorrow. First up, DTE. Let's start with DTE Energy, a regulated utility serving over 3 million customers in Michigan with both electricity and natural gas. Now here's the twist. DTE isn't just keeping the lights on, they're investing aggressively in clean energy and grid updates to handle the surge in demand, especially from data centers and industrial expansion across the Midwest. And sure, Michigan might not scream AI hotspot, but those massive server farms, they're moving to affordable, power-stable regions, exactly where DTE operates. Now, no stock is perfect. DTE is regulated, which means profits are capped, and rate increases can get political. They also rely heavily on natural gas, which adds a layer of exposure to commodity pricing and environmental pushback. But we're not chasing moonshots here, we're after balance, and DTE delivers where it counts. Here's what seals the deal. Dividend yield. 3.16%, well above market average. Dividend growth, almost 7% annually. Price return, 4.2% per year, quietly compounding in the background. Now let's break it down with real numbers. $100,000 invested today. Year 5, $390 a month, or $4,600 a year in dividends. Portfolio grows to $144,000. Year 20, $1,700 a month, or $20,000 a year. Portfolio hits $470,000. Year 30, a stunning $5,000 a month, or $60,000 a year. Portfolio tops $1.16 million. And that's just from one utility stock. Now, imagine stacking 2 more of these dividend machines. Let's move on to stock number 2, WEC. Next up is WEC Energy Group, a utility powerhouse serving 4.6 million customers across Wisconsin, Illinois, Michigan, and nearby states. But WEC isn't just flipping switches, they're modernizing the grid. They own everything from power plants to transmission lines and gas pipelines, giving them full control over delivery and reliability. What sets them apart? A $23 billion investment plan through 2028, focused on smart grid tech, clean energy, and infrastructure upgrades. They're gearing up for massive demand from EV growth, industrial expansion, and AI-powered data centers moving into the Midwest. And unlike high-risk innovators, WEC sticks to a disciplined, low-drama approach, slow, scalable, and built to last. Sure, it's regulated, and higher rates can shake things up short-term. But long-term, demand is only going up. Here's why it matters to you. Dividend yield, 3.35%. Dividend growth, nearly 7% per year. Stock return, 4.92% annually. It's the kind of combo that builds wealth quietly while the market makes noise. Let's look at the projections with a $100,000 investment. Year 5, portfolio $150,000, income $5,000 a year or $400 a month. Year 20, portfolio $565,000, income $26,000 a year or $2,100 a month. Year 30, portfolio $1.53 million, income $84,000 a year or $7,000 a month. More than many retirees ever see from Social Security, and that's just from one utility stock. No trading, no drama, just time and compounding. Now, let's roll into our final pick, and it might just be the dark horse of the entire portfolio. EXC. Last but definitely not least, Exelon, ticker symbol EXC. This isn't just another utility, it's powering the digital backbone of the AI boom. Exelon is the largest regulated electric utility in the US, serving over 10 million customers across major metro areas like Chicago, Philadelphia, and Baltimore. And these aren't sleepy towns, they're AI hot zones, packed with data centers, hospitals, tech campuses, and infrastructure that's only getting more energy hungry. But here's the real edge. Exelon operates the largest fleet of clean nuclear power plants in the country. That's a massive advantage as companies look for stable, carbon-free power to run AI systems at scale. Yes, they face the usual challenges: regulatory pressure, political noise, and the complexities of big metro oversight. But Exelon has decades of experience navigating red tape while still growing and expanding. That's the kind of quiet confidence you want in a long-term dividend play. So let's talk numbers. Dividend yield, 3.63%. Dividend growth, 5.41% per year. Annual price return, 4.17%. It's a rare combo. High yield today, strong growth tomorrow. Let's say you invest $100,000 and let time do the heavy lifting. Year 5, monthly income, $460. Annual income, $5,400. Portfolio value, $147,000. Year 20, monthly income, $2,300. Annual income, $28,000. Portfolio, $539,000. Year 30, monthly income, $8,000. Annual income, $96,000. Portfolio, $1.48 million. That's nearly 15 times your original investment, with a stream of income that rivals or beats most retirement plans. This is the power of a utility stock that combines scale, stability, and AI-era relevance. And when your income comes from the company fueling the future, that's not just smart investing, that's strategy. So there you have it, 3 utility stocks that aren't just paying dividends, they're powering the AI future behind the scenes. If you're building a portfolio for the next decade, these are not stocks to ignore. And the best part? They pay you every single month while they do it. Want to take this strategy even further? Tap the video on your screen and let's build a dividend portfolio that works while you sleep.